Sorry about that, Casey. I didn't mean to scare you and Julie, but thank you for the introduction and good afternoon, everybody. Originally had the slot before lunch and now moved to after lunch, so I hope you're still all awake, but I won't be speaking for very long. So my name is Natalie Jackson and I am the technical lead at GEFI. And I'm going to spend a couple of minutes just providing some insights on GEFI's work looking at how financial institutions are integrating the SDGs into their financial products. So I'm sure you'll be aware the SDGs adopted by UN member states in 2015 provide a shared blueprint for peace and prosperity for people and planet. The 17 goals aim to solve some of the world's biggest challenge with a target completion date of 2030, presenting an approximately $3.7 trillion per annum investment opportunity. So GEFI has been looking at the SDGs for a number of years now. In 2018, GEFI undertook a 2-year R&D process in collaboration with UNDP. We worked with the merchant banking group, RJ Fleming, to consider practical solutions to drive capital into the SDGs. Through our work, we have extensively assessed questions like, what are the commercial imperatives for financial institutions to align with the SDGs? How are they aligning, including using the underlying SDG targets and indicators? And what are the key challenges being faced, and how can these be overcome? Our work identified challenges around greenwashing, risk and return, scale, and measurement and reporting, and highlighted the need for more commercial financial products aligned to the SDGs. Through our work, we've built GEFI's proprietary SDG Insights framework, and at COP26, we successfully launched the SDG Financial Products Platform. The platform showcases commercial financial products that are directly aligned to the SDGs. The platform provides partners with technical expertise, enhanced authenticity, and access to GEFI's global network. GEFI's aim is to broaden the ecosystem of SDG investing, as we need to see more SDG-aligned products across all asset classes and banking. If you have a new or existing financial product that incorporates the SDGs, please do get in touch. I'll now hand over to Irina Kurochkina, a portfolio manager at Aegon Asset Management, who joined as our first partner. Irina will provide some practical insights and share her experiences of integrating the SDGs into Aegon's Global Sustainable Sovereign Bond Fund.
It is hot. Thank you, Natalie. Thank you, GEFI, for organizing this amazing event. It's really great to see so many, passionate people who want to move financial industry forward in an ethical manner. So I will do a bit different maybe presentation from what we've seen before, because it's really about sharing our experience with SDG investing at Aegon Asset Management. So I think I would start with saying that as global asset manager, we actually we have business across continental Europe, the UK, the US, and we did see this evolution of responsible investment solutions, because it all started with excluding certain sectors, certain companies, but it was really more about managing reputational risk for asset owners. And then, it grew into those, let's say, ESG integration things, like really looking beyond the traditional risks that you have, and now it's getting even more complicated with sustainability and climate alignment. And I'm sure that the landscape of the responsible investment strategies will continue to evolve, because the data is still evolving, the regulations are still evolving. So for asset managers, it is sometimes difficult to really see, what kind of solution we should offer to our clients to make sure that they will be valid in 5 years' time. But I really think that the framework of sustainable development goals is something that asset managers should take seriously. Well, I have slides here, but please don't feel the need to read through this. I will mention the most important points. So As mentioned by Natalie, we were indeed the first partner to join the SDG Financial Products Platform with our global sustainable sovereign bond fund that was launched around COP26. And basically the objective of this fund is directly linked to SDGs. So the objective is to invest in the financially strong countries that contribute to the progress on sustainability targets as defined by the UN SDGs. And the objective is based on our vision that actually alignment to sustainability will generate value long term, and it can actually help you to protect capital across different economic cycles. So we think that you can align to sustainability without compromising on your returns, without increasing risks in your portfolio, and while really still doing your normal risk return investment allocation, you actually help to redistribute capital to where it's needed. Well, we also integrate climate assessment in our portfolio because we think that, well, I think everyone in this room agrees that climate change is one of the biggest threats to humankind, and we try to reduce the CO2 footprint of portfolio holdings. Well, it's important to mention that the investment universe of the fund is global, so we invest in both developed and developing markets. And it is important because it provides benefits not only in terms of risk-return diversification, but it actually helps you to make sure you can address the whole range of sustainable issues out there. And, because you don't want to allocate the capital to countries that actually have no problems with assessing capital markets, right? So you also want to make sure that you can help, investing into future leaders, so countries that are serious about delivering on the sustainability agenda. And moving on to really talking why we think SDG is a great framework and how you can adopt it. So I must say that as a portfolio manager of government bond portfolios, well, there is a clear advantage for our asset class in using SDGs because Sustainable Development Goals were actually created for countries and the UN member states signed on these commitments. So that's actually a great tool of how you can translate your expectations towards the governments on what they should deliver. So in the previous session before the lunch, actually, I think it was Chris who was mentioning that, you should actually have high expectations from governments because governments need to change policies to make sure that consumers, producers, investors change as well to deliver on sustainable challenges. So, with SDGs, we actually have the tool to say, okay, as a government, you signed up for this. And yes, engagement is very difficult with governments. It's very different from engagement with corporates, but it doesn't mean that we can't ask questions, right? And as a financial industry, we should not wait for government to change, but we can start asking questions because, yes, one investor maybe is a weak force against the government, but as a financial industry, it's a lot of force we can use for good. Another point, again, as a sovereign investor, we always feel that sometimes asset owners kind of disregard what they do in their government bond portfolio, although, for many institutional investors, government bond portfolio can be a very, very big part of their balance sheet, like 30%. And they think that, well, you can't do much with government, so I will just keep it there and that's it, while really, the amount of responsible investment strategies in listed equity or corporate bonds is really exploding, and it's not the case for sovereign portfolios. So it's really a misperception that, if you can't do much, you shouldn't do much. But why we raise standards for companies to do more for climate or sustainability and not towards governments? These are good questions, I think. But if you translate this all into mandate setting, so what you can use if you apply Sustainable Development Goals in your portfolio is that you actually create the common ground in terms of definitions. because the knowledge on SDGs is increasing among our clients in the industry, and it actually helps you to really say what you mean when you say you do sustainability alignment in your portfolio. And it's different from ESG landscape, because we know every asset manager has its own way of defining ESG factors, right? And then, clients can get confused and disappointed because they don't understand what actually you do with their money. So if you use the framework that's already there, it helps you to avoid this miscommunication. Another important point is how SDGs are different actually from most of ESG frameworks is that there is clear target setting exercise. So a country can have a score of 100 on certain SDG, and that's how you know that a country did a great job. And if a country still have a low score, then that's where they need to progress. And in terms of communicating what are the targets for governments, to improve, it's very, very useful tool, because again, in ESG world, we often see that there is a certain exercise of ranking, and then you basically invest in the top of ESG ranking, but sometimes a country would improve in rating not because they did well, but because others did worse. And this is very relative, but if you think of sustainability alignment, I think having these targets clearly set is really helpful, because then the deliverables are also much more clear. And again, to mention the data, because no discussion on ESG can be done without data. In case of SDGs, again, we have a very transparent data set of indicators we can use. And it is very important because we as asset managers, of course, need to be able to explain to our clients what we do, but also to make sure that the data is coming from reliable sources. And there are actually great academic efforts out there that link all the SDGs to a set of underlying indicators. And that is helpful because then it's not us subjectively making a call, what kind of indicators SDG mean, but there is someone out there, someone smart, who actually define what should be used, what should be monitored. And it also avoids this risk that, fund managers just cherry pick a set of indicators to make their portfolio look nice and then don't want to actually change the way they manage portfolios. So with SDGs, we actually take this away. And just to mention a few challenges, but there are always challenges. And so I think the data, yes, there is data, but of course we need to be careful with how we use this data, because in our case, the data updates are coming 1 year late. So if you only take SDG data to make investment decision, then you're always late. You're making really, late call. So for us, it was important to have a proper qualitative overlay, so qualitative assessment on top of the data, so that we can really look deep in numbers and understand why SDGs are not improving, or what kind of policy a government should change to actually deliver on this SDG. So we try to incorporate some forward-looking elements and make sure we are not missing any important development within a country while the data is not updated. Another important point is that if you apply SDG assessment just bluntly, then you might risk to have a biased view. So example of this is, for most rich developed countries, all the SDGs related to climate look kind of bad, because of course, those are the wealthy countries with high level of consumption, often fuel-intensive economies. So the performance on climate-related SDGs is not great. And if you compare them to SDGs of low-income countries on climate, then the low-income countries might look actually very good. But you need to be careful with drawing conclusions, because, if a country has good climate scores just because they didn't have money to basically ruin those scores because they have low level of consumption, doesn't mean that will stay like 10 years from now. So you also want countries actually to have proper policies in place to keep SDGs moving in the right direction. As a concluding thoughts, I think I'd like to say that overall we think that SDGs are a powerful tool. They do address the most crucial challenges society and planet face, and we as an investment industry can actually do a lot of good things by using SDGs. And I think that the more SDGs are used, the more meaningful they will become. I always like this comparison to credit ratings, because at some point, credit ratings became really widespread and everyone knows what AAA country is or BBB country is. And then, a government or a Ministry of Finance, they know that if they increase their debt, at a certain point, credit agency will come and say, this level of debt is not sustainable, so we downgrade you. And then the cost of debt will actually go up for them significantly. So when they make changes to their spending plans, they do take this into account. So if governments know that, a lot of players in the market assess their progress on SDGs, why not take this into account, right, when you make policy changes? So I'm really hopeful that we can make a difference, and I think that the fact that GEFI launched the SDG Finance Product Platform is really helpful to increase awareness of SDG investing and stimulate the launch of new products aligned to SDG. So we're looking forward to have more partners on the platform. Thank you very much.